ICICI Prudential has reported a profit of 156 crores in the first quarter of FY23 against a loss of 186 crores in the corresponding quarter last fiscal. While the operating expense increased by 16% year-on-year, profit was mainly driven by significantly lower claims and provisions related to COVID-19. That said, accounting profits are not the right yardstick to compare insurance companies. That's because as per accounting rules, commission paid to agents or distribution partners is recognized upfront, while premium income is amortized over 4 quarters. So higher operating costs for growing the business often leads to a drag on reported profit, which is called new business strain as per industry parlance. A better metric to assess insurers is the top-line growth, which is the total annualized premium equivalent (APE), a measure to ascertain business sales in the life insurance industry. Another key parameter for a life insurance company is the value of new business (VNB), which is the present value of profit that's expected to be generated over future years by the new business written in a particular year. VNB is the EPS equivalent for a life insurance company. It's the unit of measurement to gauge the profitability of the business. VNB represents the actual value created for equity shareholders in a particular period, and hence it determines market valuations. ICICI Pru's Q1 FY23 results were a mixed bag if we consider APE and VNB margins. While the expansion in VNB margins continued in Q1, long-term APE growth was weak. ICICI Prudential's APE grew 25% YOY in Q1, driven by protection and annuity business, which grew 22% YOY and 69% YOY respectively. Within protection, the decline in retail protection business was more than offset by strong growth and better pricing in the group business. There was good traction in savings products. However, in a prolonged rising interest rate environment, growth of guaranteed savings products may get impacted by competition from other savings products such as bank fixed deposits. ICICI Pru's APE growth in Q1 optically looks very strong. However, this growth was achieved on a lower base as the business in the corresponding quarter, Q1 FY22, it was impacted by COVID Delta variant. If we consider the longer period to smoothen out impact of the pandemic on business growth, the APE growth looks weaker. The compounded annual growth in APE in the past 4 years, from Q1 FY19 to Q1 of FY23, is a mere 2%. While the top-line growth continues to be lackluster, there has been significant improvement in the insurer's product mix. In the last few years, ICICI Pru focused on growing protection products, which provides cover against mortality risk, and the annuity or savings segment, which insures against morbidity risk. Consequent to the strategy, the share of relatively high margin protection business has increased from 8% of APE in Q1 FY19 to 22% in Q1 of FY23. Also, the share of ULIPs has come off, which now constitutes 41% of APE compared to 80% in Q1 FY19. ICICI Pru has done exceedingly well on margins front. VNB margins have expanded to 31% in Q1 FY23 from 29% in Q1 FY22, driven by better business mix. ICICI Pru continued to enhance and diversify its distribution network. APE through the ICICI Bank channel declined by 11% over the March end quarter. However, APE of other banks grew 71% in the same period. The share of ICICI Bank in total APE is now down to 20% versus 25% as of March end. ICICI Pru's VNB increased by 32% YOY in Q1 FY23. The insurer had earlier guided to double the FY19 VNB by FY23, and management is confident of achieving the FY23 VNB target of 2,656 crore, implying that VNB should grow by 23% this year over the last financial year. ICICI Prudential's Q1 FY23 earnings underscore that it is well on track to achieve the VNB target for FY23. The insurer had transitioned from a capital markets player to a diversified franchise by growing protection and annuity businesses, moving into new products and customer segments, and enhancing distribution capabilities. The management expects a revival in retail protection business, which was hit in FY22 due to supply side issues. The ROEV, which was impacted by mortality variance in FY22, is set to improve. ICICI Prudential stock is now trading at 2.4 times price to EV for FY22, which is reasonable given the growth levers. It's trading at a significant valuation discount to HDFC Life. The valuation gap with HDFC Life will narrow only on acceleration of business growth. In the long term, business transformation will pave the way for growth, offering upside to the current stock price.